We are shaping the future of banking and insurance.
We are believers in the power of collaboration.
We are a network of local hubs with global reach.
We're facilitating innovation for corporates and startups.
Through F10, we can connect to a global network of innovation and startups.
We look for the bright startups to address upcoming challenges. Let's come to F10 and work with us.
We received exposure to different partners and investors during our full time at F10.
This way, we were able to scale and speed up the products that we were already working on.
We can partner with leading banks and insurances.
Being part of the competitive F10 program clearly widens the range of potential investors for us and gives us fast-track access to smart funding.
We invest in F10 startups because of the amazing deal flow.
Join us so that we can shape the future of banking and insurance together.
Hi there, welcome to our first demo day here in Singapore. My name is Lisa and I'm really glad you found your way here to hop in on this platform. We are here for the first time in Singapore giving our demo day with our first batch, and to kind of get started with the platform that we're all using for today, I would like all of you to tell us where you're dialing in from, because we are here based in Singapore. We know we have our colleagues back in Zurich and in Spain, but where are you based? Let us know. You can find the chat on the right-hand side. So please let us know where are you dialing in from at the moment. And I see I already get the first few answers. Oh yeah, well, London is not surprising. We have our startup based in the UK, South Africa, pretty cool. Europe, obviously, South and Beijing, wow. So truly global, as we really like it. So thank you so much for playing this little warm-up game with us. And without further ado, I'd like to welcome Jonas, who's going to give the welcome speech now.
Welcome, also from my side, to the demo day of our first startup cohort here in Singapore. My name is Jonas Thürig, and I'm very excited to finally see our startups graduate. What started as a local incubator initiative in Zurich in 2015 has now grown into a platform that spans across 2 continents. Europeans exploring Asia has actually a long tradition that dates back to great explorer Marco Polo, who came to Asia in the 13th and 14th century and lived here for decades. During his time in Asia, he made great discoveries of inventions that were widely unknown in the West, such as gunpowder, porcelain, or paper money. For F10, of course, we are here to learn from innovations that are happening in Asia, but we are also here to facilitate and foster an ecosystem of fintechs and insurtechs. And we want to help and facilitate the exchange between Europe and Asia. We are now actually active in 3 hubs in Singapore, Switzerland and Spain. But today is all about the startups. In the past 6 months, the founders have made remarkable progress with their ventures, despite the ongoing pandemic, as if starting a venture itself wasn't hard enough. But as the saying goes, what doesn't kill you makes you stronger. I'm fully convinced that with the learnings of the past 6 months, the startups are more resilient now and they're well on their way to reach their next big milestone. To launch an incubator requires enormous team effort. I would like to thank you, Lisa, Jayadeep and Guankiat, for your great effort here in Singapore. But we have our teams in Zurich and Spain also supporting us. A big thank you to all the colleagues. As the collaboration between startups and corporates is at the core of what we do at F10, it is very great to see that we have so much support from our corporate partners here in Singapore that are SIX, Julius Baer and R3. On the ecosystem front, we are proud to have the following partners already on board: Enterprise Singapore, Singapore FinTech Association, Switzerland Global Enterprise, Singapore Management University, Blockchain Valley Ventures and Linklaters. Last but definitely not least, we are very proud to have so many outstanding individuals as mentors supporting our startups on their journey. Thank you, mentors. Now it only leaves me to wish the startups all the best for their future, and to the audience, enjoy the show.
All right, thank you, Jonas. So before I actually continue with the program overview, I would like to briefly mention our winning game that you can participate in for today. We are going to announce the actual rules for that later on, so please stay tuned, but I promise you we will get into that later on. So first off, I'd like to give you a brief review of our program, what we have been through in the past 6 months. It has been quite a ride for us. Obviously, everybody knows the situation we are currently in. Hasn't been easy working from home. We also had suddenly to transfer our program to an online version. So first off, I'd like to share a little bit about how we select our startups. So we accept online applications, and for this very first program here in Singapore, we received over 300 applications. So that was really amazing for us to see that many startups are interested in what we do. Based on that, we invited our corporate partners for the first time to meet the best 50 teams for the first time and really evaluate whether they would like to work with them. Then we basically invited the best 20 startups to join us for the another online interview. Basically, usually we would do that in person, but as we were quite surprised by this new pandemic, we had to convert it into an online version as well. So the teams got to meet the corporates a second time with more in-depth discussions. And based on all those interviews and reviews, we selected the best 10 teams. And today we have 9 with us because on the way we actually decided to offboard one of them. So they are now parting ways and going on their own way and on their own pace, because we are here in an incubator. Things are happening quite fast, so sometimes it happens. We are parting ways with one or the other team. So a few numbers I'd also like to share. We did some number crunching in the past few weeks as well. Always interesting to see where all the founders are from. So first off, obviously the geographies that we were covering. As all the programs, we are still struggling with enough female founders. So at the moment we have 13% of female founders and very male dominant still. But we are working on that. But that's obviously a topic for another day. We had 7 teams originally based in Singapore. Now still 6 are with us. 2 are based out of India and 1 from the UK. Also quite interesting to see the variety of topics that our startups were covering. And obviously you will see for yourself later on during the pitches. But just to give you a little bit of an insight, digital assets were one of the topics, data analytics, data intelligence, enterprise data management. So really stay tuned. We have a lot of interesting teams to present later on. Also interesting to see is that it was quite half-half for the first-time founders and serial entrepreneurs. So really a good mix for us to learn from each other. So that was really exciting for us to keep learning and to really share experiences wherever possible. All right. Then we have a little poll that we would like to do again, just for us to know you also a little bit better. What actually made you decide to join us today? Is it the startups that you would like to see? Is it to learn more about the F10 itself, or completely different reason? Let us know. Again, over there in the chat, we have a little poll that we opened just now. So please let us know so we can also get to know a little bit more about yourself. Awesome. Thank you. And we'll review the answers later on. Then another quick insight for all of you. So what have the startups actually been through in the last few weeks? We basically guided them through 5 masterclasses, really helping them from the initial ideation, problem solution, fit stage, all over to really developing their products until they launched it, not only shortly after the program, but a lot of the teams already have working products right now. So please listen closely later on during the pitches to learn about their products and services. And as I already mentioned, so we were quite surprised to convert an offline program into an online one. So we did a bit more of a number crunching, and we used 13 tools, as it turns out. Slack, obviously, one of them we've always used, but Hopin is one of the ones that is quite new to us. So we were really lucky that we found this platform, because that made events so much more engaging than just using Zoom or GoToMeeting or Hangouts. Obviously something we were familiar with, but it's quite nice that all those tools are coming out now that make it a bit more engaging. We also, obviously spend a lot of time in front of our screens, unfortunately, I think as all of you do. We also calculated roughly that we spent over 130 hours in front of our screens during the workshops. So really high respect for all the teams that are staying with us during those workshops. It's really a lot of work to spend that in front of a screen. As we kind of try to make it a really interactive workshop, we had to create a lot of breakout rooms on Zoom. So we calculated roughly that we have 250 breakout rooms that we created over the last 6 months. And I guess we all had the scenario where we were told, or we had to tell somebody else, that you are still mute. So that's again a rough number of over 100 you're still mute phrases that we probably heard over time. Really exciting that the teams still made it through those rough 6 months. So again, I would like to share a couple of impressions that they shared with us over the last few weeks, just to also let us know where they are based, how they're actually setting up their home office. So I'd also like to share that with you real quick. And before we actually dive into the next, into the startup pitches themselves, I would actually like to highlight that we are inviting our corporate partners as well to speak with us today about the future of financial services, especially the next 10 years is something that we are really interested in. So we are going to talk about the co-creation of the future together with them. Welcome everyone. Today we would like to talk about financial services in 2030, and we would like to especially focus on co-shaping the future together. We've seen in the past 10 years that fintech is on the rise, and especially here in ASEAN we've seen more than 2,500 startups emerging, with almost half of them deciding to choose Singapore as their headquarters. Initially, in the past 10 years, we always talked about incumbents and fintechs being foes. But recently, Deloitte actually discovered that the sense of us versus them has developed into a us and them. So really, fintechs and incumbents have become friends. And this is exactly what we would like to talk about today. And I'm not the only one here. I have actually 4 brilliant guests with me today, who I would like to introduce. So we have Andreas Zink of Bank Julius Baer. We have Neil Thomas with us, the country head of Japan and Singapore for 6 in APAC. We have Amit Ghosh with us, heading the office here in Singapore for R3 in APAC. And we also have Pat Patel with us, Principal Executive Officer for the MAS. And with that, I'd actually like to discuss their view on the aspect of collaboration between fintechs and incumbents. And specifically, how can Singapore remain a leading fintech hub in those exciting times? And finally, would also like to touch upon the topic of how can we actually bring society forward through those very difficult times moving over to 2021. So first off, I would like to invite Neil and Andreas to join me for a discussion on how do you see the rise of fintechs nowadays? Is it a competition or do they actually have become friends? Andreas?
Well, Lisa, yes. Thank you for the question. I think, as you pointed out, initially, when the whole trend started, you could perceive fintech as a threat to incumbents like us, traditional Swiss private bank. And on the face of it, if you look at the trend of number of fintechs versus number of banks, in the particular private banks, and the consolidation going on in banking, you could say, yes, there is a point, they are actually competing. And when the first robo-advisors came up, it was probably even perceived more as a threat. But in our business, in wealth management, there is still a very important human element, the human touch, which is a very important part of the value proposition. What we see is that fintechs, they raise the expectations of our clients and generally the whole digitalization which is going on in the world, not only from the financial services, but in general. And with that, of course, they raise the bar, the competitive bar, and we also need to transform our value proposition and include digital elements. But we don't believe that a pure fintech offering, at least we don't see it around the corner, will replace the holistic, trust-based value proposition of wealth management, which requires that human touch, which I mentioned, anytime soon. So in short, it's really about collaborating and collaborating intelligently with the fintechs to enhance our offering and adding the digital elements.
Mm-hmm. Thank you, Andreas. And Neil, for you, with the human touch in financial information, is there any such thing?
Yeah, well, I think, you look at SIX, and we're a global company, we're a financial infrastructure fundamentally, and our business is quite diverse. So you have data, financial information, you have our traditional Swiss stock exchange and the Spanish stock exchange. You also have a payments business and banking services, and we also now have a digital exchange. So all of these areas are very strategic to SIX, and we're trying to achieve different things. And I always say, with fintechs, it's about what's the strategy of our organization and how can we execute upon it. And how, yes, you argue that there are fintechs who are trying to disrupt that process in certain areas. But ultimately, I see a lot of fintechs really trying to support us in our strategy. So what are we trying to achieve in the next 1 year, 3 years, 10 years? And some of these projects like the digital exchange are a 10-year view. And you can't do all of that on your own, and you need collaboration and support by the fintech community to sort of say, look, we have a problem we need to solve here. Can we build it in-house? Probably, but it might be expensive. We can only do it for ourselves, and it will take us a long time. Can we work with a fintech who can solve that problem for us? Absolutely, and we do that a lot today. And I really see that as the model going forward. We are the infrastructure. We have that position of trust, and we're established in the market. But fintechs then can come into us and support us. In the data world, to your point about, is there any human touch? There's probably far too much human touch on data at the moment. People sitting in big teams in places like India and various offshore centers where they're just keying in data. And we're working some from the F10 already. How can we automate that process? How can we use technology like machine learning, AI, to streamline, speed up, and create more accuracy? So very much, we need to use fintechs and reduce some human touch, but we also need to have that kind of the human touch to ensure the quality and build the relationships with everybody.
Awesome, thank you, Neil. And actually, I really like that you pointed out the collaboration aspect, and I'd like to hear Amit's view on the collaboration between incumbents and fintechs, as you are an ecosystem provider yourself.
Look, as R3's origin started by bringing financial institutions together to provide value to them and bring other side of the ecosystem. So collaboration is core to our technology. So distributed ledger technology is about collaboration, bringing parties in the ecosystem together. And as R3 as an organization, we believe that collaboration is something we can facilitate quite well. And we do that together with our financial institution ecosystem, customers and partners, but a large segment of our startups who work and build on the Corda platform. So, we have seen that collaboration is the right way to go. It depends on the incumbent sometimes, their willingness, but more and more financial institutions are more and more willing, as both Neil and Andreas said, to collaborate. And we see these examples in the insurance industry as well, right? Where, a company out of Israel has built a solution on claims management, and they are working now with one of India's leading motor insurance providers. So there's just so many examples we can talk about collaboration, and I think that's our role, and we've provided quite a few things to enable and further the collaboration.
Thank you so much, Amit. That was really insightful, and now that we've heard actually quite a few topics in terms of collaboration between private banks and fintechs, the Swiss Stock Exchange and fintechs, insurance and fintechs. Pat, have you also come across other areas that are interesting from a regulatory point of view that are relevant for the fintech development?
Sure. So I think if you look at Singapore, its fintech ecosystem, it really started in 2015, and there isn't a large domestic marketplace. So for the B2C sector, you will rarely see handfuls of those coming into this marketplace. It's built on the B2B sector. And so a lot of what MAS has been doing and the wider government agencies is looking at initiatives that bring fintechs and corporates together. How can they work together and try and incentivize that? So whether that's through innovation labs that are, there's a lot of large corporates that have centered their innovation labs in Singapore, or it's through kind of proof of concept grants, or even an initiative that we started a few years ago called APIX, which connects banks and fintechs, but across the piece. So it tries to speed up the whole kind of proof of concept, because, the traditional way of banks and fintechs, or organizations and fintechs working together, has been quite fractured. It's quite painful on both sides of the case, and it can be quite crippling for a startup. But then if you put yourselves in the shoes of the corporate, there's a lot of layers that need to happen. So you need to be able to have the procurement side of things, you need to have kind of risk and compliance involved. And so that process can take a while. And so this whole kind of platform that was built, it's essentially an innovation sandbox in the cloud, is there to try and speed up that process. So you can test multiple APIs, you can see if a product works, maybe test the best in class, and then decide which ones you want to work with.
Thank you. Then it's really impressive to see how the regulator actually takes active steps to support this ecosystem, not only here in Singapore, but really at a larger scale for the region itself. And
out of necessity as well.
Also that, but also, also as an accelerator, incubator ourselves, we always have the outside perspective of things, and there's only so much we can do as a support organization. So I'd also be curious to hear from our corporate partners, again, what are the real success factors to make collaboration work with fintechs?
Hello everyone, we are Fencore and we're here to make data management easy. We've developed a cutting-edge data management platform for financial institutions that will help save 50% of time and cost on data management projects. In the finance world of today, all manner of business decisions begin with data. Whether in a bank, hedge fund, or government pension fund, finance professionals funnel millions of data points through their systems every single day to run business operations, make key decisions, and understand their risks. This emphasis on data-based strategies has led to a variety of data management problems that such organizations face. They include issues around data quality, data flow, data lineage, security, compliance, and many more. To support this, software companies began developing data management solutions almost 30 years ago and sold them to banks and asset management firms. In a time of 90s technology and a relatively young financial data management industry, the foundation of a global industry was formed. Fast forward to 2020, and we find a data management industry that is now standing on the edge of change. The large enterprise software vendors have not kept up with the times and have built up massive legacy problems over the decades, resulting in bloated software and manpower-heavy projects. These problems are pushed onto financial institutions, who are paying for overpriced solutions and long implementations that have a 50% global failure rate. What is the impact of this? larger financial institutions are forced to struggle with inadequate market solutions, while many smaller financial institutions can't afford having a data management system at all. At FenCore, we have built the next generation no-code enterprise data management platform to take on this problem. We have a proprietary engine built using the latest technologies that provides a cutting-edge set of tools and workflows to the mastering of data. Our clients benefit from a boost in operational efficiency, as well as a 50% saving of time and cost on data management projects, thanks to algorithms and out-of-the-box functionalities that shorten implementations by 80% and lower manpower requirements. To do so, we have a system that is lightweight, fast and powerful, running on a cloud-based and Dockerized environment that allows for flexible and quick integration with a client's systems. We accept all data formats and work with a variety of database technologies and provide powerful data transformation, modeling and mastering capabilities. Implementation consultants and end users also love us for our user-friendly and efficient user interface. The industry agrees with our value proposition, and our engagements with financial institutions have been strong. However, our use case does not stop with the finance industry. We intend to grow our roots in the finance space, but will expand to include all other industries. And the need for this is growing rapidly. The enterprise data management market alone is estimated to be worth $22 billion by 2023, while the total value of the data management market is estimated to be worth $135 billion by 2025. We have a great team to take on this problem and market. I'm James Crosby and I'm the CEO of FenCore. I'm an expert in the enterprise data management industry and have worked for over a decade in the industry as both a software developer and consultant. I've helped develop one of the leading data management platforms on the market, and I've worked as a consultant for two of the leading data management firms as well. My partner Jin Hu is an entrepreneur whose previous startup provided digital transformation services to leading companies in multiple industries, as well as government organizations. We also have a strong team of experienced professionals serving as team members and advisors supporting our operations. The world is now at the perfect intersection of technological development and market readiness for staggering growth in our data management platform. So please, come talk to us and learn about what we can do together. Thank you.
I'm Connor, the head of product at Bond 180. First off, I'd like to thank the team at F10 for putting together today's events and for such a great experience over the past several months in the accelerator. Bond 180 is a capital markets fintech that helps institutional investors to unlock opportunities in fixed income. It's a challenging climate for asset managers. Even though AUM is at record highs, persistently low interest rates, evolving regulation, and competition from passive products are making it more difficult to generate return and to meet client requirements. In response, we've seen asset managers not only embrace digital transformation, but also to shift their focus towards asset classes like private credit that offer opportunities for competitive advantage and excess return. We make opportunity discovery in private credit simpler and easier, solving a key issue for fixed income businesses. Private credit markets are illiquid, opaque, and growing, which makes sourcing quality investments a major challenge. Our solution is a software as a service platform called the Demand Management System, or DMS. The DMS allows fixed income PMs to structure, to understand, share, and to ultimately leverage their demand data to more easily source the private credit investments they need. The DMS is a web application that allows demand models to be constructed, analyzed, and shared, all in an intuitive interface accessible via the browser. We integrate seamlessly with existing technology systems and provide a complementary service that enhances the buy-side's existing investment technology stack and their workflows. The DMS is in production, and we're launching a pilot program for a small group of early buy-side adopters starting in Q4 and moving into the new year. As you can see in this short product demo, The DMS offers a number of different analytics modules that help users to filter, interact, and visualize their demand landscape across the firm and across a number of different portfolios. Demand is dynamic and changes over time. And so via integrations with a number of different buy-side technology systems, we empower users to create the demand models and to create the indications of interest that they need to be able to share both with users internally and with those on the sell side. In addition to analytics, the DMS enables the buy side to use their now organized demand information to communicate their needs to the sell side much more clearly. Via our 180 Match product, the buy side is able to view investment opportunities that are on offer from their sell side counterparties that are now bespoke and tailored to match their needs. The DMS is a SaaS product, and our clients pay a yearly subscription fee for access to the service. For any deals coming out of our 180 Match product, we also earn a small transaction fee. Our team combines decades of finance and enterprise technology experience at institutions including Legal and General Investment Management and Prudential M&G. We are also very happy to have on board as advisors the former global head of capital markets at ING, as well as the former head of DCM syndicate for EMEA at Citigroup. As I mentioned earlier, we're in the process of launching a pilot program of our DMS. That includes complete access to the software and its analytics, as well as the potential to help work with us to define and influence the future of our product development. If this or if anything else I've spoken about is of interest, please do not hesitate to reach out. Thank you very much.
Hi, my name is Nicola. I'm the CEO of DXTF, Decentralized Traded Fund. DXTF is a platform blockchain for digital asset management. Our protocol connects investor and portfolio manager peer-to-peer, and we are proposing a solution for a fully decentralized custody, which solves the liability problem of most portfolio managers. By cutting the middleman, we're also making the asset management fully meritocratic. We have a very experienced team at DXTF. Our managing team has a solid background in traditional finance, and our technology team has hands-on experience building technology solutions for the banking industry. We also have a number of advisors that comes from big corporates like Google and other traditional asset management companies. We're trying to solve two problems. The first one is what we call the delegation impossibility. Who owns the keys owns the asset. In the digital asset world, in order to transfer investment decision to a third party, it's also necessary to transfer the ownership of the asset. And our solution doesn't require that. The second problem is that traditional asset management is broken. There are too many intermediaries that add very little value to the system and suck up to $35 billion a year in fees. And the only two players that are really key for the entire system are the investor and the portfolio managers. Our solution is quite simple. All it requires the investor and the portfolio manager who are connected peer-to-peer, and the third party, the arbitrager, that keeps the system running smoothly and efficiently. The DXTF opportunity is quite big. As of 2019, there were approximately 150 crypto funds managing $2 billion of assets under management. And the market size for DXTF can be up to $150 to $250 million. And the world is going beyond crypto. As the market grows, with non-financial assets also being tokenized, like wine, arts, and real estate, making the underlying asset available for our fund manager bigger and bigger on our platform. And this is expected to grow to $130 billion by 2030, making the opportunity for DXTF bigger and bigger over time. The DXTF platform was launched about a month ago. On the 9th of September, we launched our first version on the Ethereum mainnet, where portfolio manager investors are allowed to create passive funds and invest in structured notes. We're also working on new products like the decentralized exchange and the rebalancing feature, which will allow portfolio managers to actively manage their funds. The traction today has been pretty good. We have approximately 45 portfolio managers registered, more than 400 active users, and 100 plus investors. We also have 51 funds created with $350,000 under management and 800 plus followers. Our brand has grown pretty well thanks to the F10 accelerator and the number of POC that have been granted to us by the Monetary Authority of Singapore and the Tier 1 bank here in Singapore. We also have some established partnership with key players in the DeFi community, like Kyber Network, Set Protocol, Expert, and Red Alliance. And we're looking at new partnerships to grow our ecosystem. There are a number of competitors in the industry, but only the XTF is looking at solving all the 4 key elements that we believe are necessary for a good active fund management system: the custody, the rebalancing, the autonomous pricing, and real-time trading. Our competitors are looking at some of these problems, but not all of them. In addition, the client focus is different for the XTF and all our competitors, where some of them are focusing on the B2C market, whereas the XTF is focusing on the B2B. We raised $460,000 last year in November in our first seed round, and we're looking at raising some fund in a Series A round in Q1 2020, Q2 2021. If you're interested in knowing more about the XTF, please reach out to us via email on protocol@dxtf.com or visit our website. You can also find more information about the XTF and our project on the main social platform. Thank you very much, and looking forward to hearing from you. Thanks.
Hi, my name is Kumar and I'm the founder of Incredo. We help digital lenders get closer to 100% repayments by de-risking unsecured lending. We deliver actionable insights by analyzing banking transactions of their borrowers. We found that lenders are spending more than 80% of the time in just collecting, organizing, and structuring data. There's hardly any time left for high-impact jobs such as data analysis and capital allocation. Why is data so complex to use? In India, we've seen that banking data is residing in silos of information that do not communicate with each other. For example, if I want to share my banking data with another financial institution, the only way to do is download my data in non-machine readable forms and share it electronically via PDFs or scan images. Now, this makes data transformation the next most expensive job after data collection. We found that our customers have to manually intervene between processes to do anything smarter. Now, this makes it even harder for our customers to attain economies of scale. At Incredo, we've taken on the challenge of data extraction, transformation, and data analysis in a very, very time and cost-efficient manner. What took hours earlier, if not days, now takes few minutes for our customers. The number of lenders who are now able to disburse loans in 15 minutes of origination. They're able to do this because we help them identify both the intent and capacity to repay within seconds. The intent can be identified by forensics of the transactions and determining the relationship between different lenders. My favorite is being able to time their repayments. Lenders, by using Incredo, can now identify the recurring sources and the dates on which the money flows are coming in. This has helped a number of lenders reduce their NPAs. Our customers are majorly targeting emerging India. These are businesses and entities which are operating out of near prime and subprime markets in India. Now, India is a huge market. It's very difficult to take a shot at this market in one chance. That's why we have segmented our customers into 4 types. We found that our most engaging users are revenue-based financiers because they have a constant need to monitor revenues of entities by analyzing bank statements. What makes it even interesting is that they're addressing only 4% of the entire market. Now, this gives us enough breathing room to become a monopoly of a small market. We should be able to do this in next 2 years. To do this, we have designed a revenue model to capture maximum value from customers at every growth stage. These are screenshots of landing pages of our established competitors. We found something unique which others are not seeing, and that is repayments. Data was not fashionable 10 years back. Today, it is trendy. 10 years down the line, I'm not sure. But repayments is going to remain a timeless need of the business. In addition to it, our customers also love us for ease of onboarding. They can easily get started with Incredo in no time by using a dashboard, and also they can seamlessly integrate APIs within a day. We've taken a sweet time to reach over here, and it happened because we became Raymond profitable almost 2 years back. In next 1.5 to 2 years, we want to focus upon 100% repayments for our customers. To do this, we are raising $500,000 of which around 50% of it is going to be invested in product and delivery infrastructure. Almost a third of it will be investing in user acquisition. We've grown at a healthy rate of more than 90% by revenue in the last 3.5 years. By injection of $500,000, we'll be growing at an average of 200% per annum. And we can catalyze this growth further by regular capital injections. We are a team of builders. Samkit, Ritesh, Krupa, all three joined us right after the college, and they've been builders right from the college days. Before building Incredo, I was building HelloMeets. Weber and Abhishek bring us their decades of experience from financial services. Weber works at a credit rating agency, and he is good at rating companies. Abhishek sir has built 2 multi-million dollar companies in the last 2 decades. Today, at Echo, he's processing more than $2 billion of transactions every year. Last but not least, let me remind you why we are a good proposition. We are a team of builders who know the art of taking the product to the market at a very lean budget. But we have identified an opportunity that others are not seeing, and we believe that our strategy of becoming a monopoly in a small market is going to work. Thank you. I look forward to seeing you at our booth. I'll be really happy to answer your questions. Thank you so much.
I'm Angela, co-founder and CEO of Natarum. And every year, over $2 trillion is laundered through the world economy. This is costing companies over $100 billion every single year as they try to comply with the ever-increasing amount of regulations that are being passed by governments. But unfortunately, this is not money well spent. Average onboarding times globally have exceeded 30 days. And in a response, companies have had to hire huge amounts of headcount to try and keep up with the data that they receive from their customers and vendors. As a result, 80% of compliance spend globally is on headcount. This is both bad for business and a huge opportunity for us. Now, despite all this time and all these people being involved, the system is still really broken. And because of this, companies are expected to be hit with $400 billion in fines in the next 5 years alone. But the biggest problem by far with the whole industry is fragmentation. Now, to check a very simple ownership structure like this one, a Singapore company owned by a UK parent company with a couple of directors living in the Caymans, the compliance analyst that receives the onboarding documentation will have to enter that information into a multitude of platforms, databases, and tools to take it from the first step of receiving the information to the final step of having them approved for onboarding. This is a very slow process, it's very frustrating, and it introduces the opportunity for error. So that's where we come in. We're a global third-party risk platform which automates 90% of the existing process. And we do this by being a one-stop shop. We're an API-led solution, and we currently connect with over 200 databases in over 150 different countries. We service the entire third-party risk value chain, from the identification of all the individuals right up to the ultimate beneficial owner. We screen the related parties against a multitude of international databases. We then use our customized AI-assisted risk assessment process to understand if this person meets the risk criteria suitable for your business. You can then 100% continue the approval process all through the platform with our inbuilt e-signing tool. All of the documents, data, and decisions are then stored in our audit trail. You can use our platform either via our suite of APIs to connect with your existing tech stack or via our dashboard. Now, the dashboard has seen a real new lease on life since COVID has hit, as people are looking to more of an immediate solution to their immediate problems rather than going through a lengthy integration process. So we're really excited about the future of our dashboard. Now, the good thing about having a one-stop shop is it opens you up to a new world of analytics and collaboration. So there's no point in doing this huge drawn-out process if you don't save the data, which is where our audit trail comes in, but also if you can't see where the bottlenecks are. So through our analytics tools, you can monitor which cases are open, which tasks are outstanding, and find out where those much needed to eliminate bottlenecks are. We've also designed the platform to be collaborative, so no matter the size of your team or the location, they can work easily together and have a very clear understanding of what needs to be done next within the process. This is all a long way of saying transparency is key to the process. Gone are the days where companies have an inbox that receives all of the information and then sends it out to a decentralized team. No need for that anymore. We can service any industry, and we can add value to teams of any size. We have 5 different industries that we are focusing on. Right now, we're working through fund management, technology, and legal and professional services. But we've also made some good inroads into MNCs and banks as well. We have a track record of delivery with a very small, lean team and also very finite resources. We've managed to build an incredibly robust, enterprise-ready product. The founding team consists of Jamie and myself. I'm a private equity lawyer who has spent a long time working in risk and compliance strategies for large organizations. And Jamie, she's a UPenn educated engineer who has spent quite a lot of time working for some of Malaysia's most successful startups, right from employee number 1 right through to building and shipping data products with large teams. We've built a strong ecosystem. We currently are sitting on 4K MRR with 0% churn, and we booked 20K of revenue this month. And we have a very strong pipeline that is going to play well for the next coming months. What we're looking for in an investment partner is 750K as a total round, which will be split across 4 buckets as listed here. We're building partnerships on 3 fronts. So first of all, we're seeking customers. Second of all, we're looking to integrate with existing and new data providers in new jurisdictions. And we're also looking for the right investment partner to come on board to really help us grow in the coming years and months and years. Thank you very much.
As a support organization. So I'd also be curious to hear from our corporate partners, again, what are the real success factors to make collaboration work with fintechs?
I think Pat already alluded to one interesting element, or also from personal experience now, going through the first program, and as an organization, obviously we have quite a few examples from our involvement in Zurich. It's not an obvious one, a collaboration between a startup and incumbent with the structure around risk, legal, compliance, procurement. So for me, the number 1 key success factor is really openness from both sides, and also a little bit of awareness about the difference in governance, the different pace in decision making.
Mm-hmm. Okay, thank you. Neil, any ideas?
Yeah, I think obviously as a fintech, I think that it's important to, maybe as a startup more than a fintech can be obviously very much the established organization, but listening to your point a bit about the problem statements. What are the corporate trying to achieve? And is your product the fit, or what you're offering, is that a good fit for that? And one of the advantages that early stage startups have, maybe if they don't have an MVP, is that they can manipulate their build and design more around what those requirements are, because there's a good opportunity. If it works for one bank or one organization, it could probably be scaled. I think that listening part, you do see a lot of people with a very fixed mindset. This is what I'm trying to do, and I think maybe you have to just open yourselves up a bit more. Be willing to take feedback about what and how the product or your offering can be improved or developed to suit more of the needs. And I think that interchange is really important. Getting that bit right and the communication right. And the other thing I think is pace. The fintechs and startups move far faster than corporates do. I mean, we, as you say, have lots of due diligence, lots of compliance. Can we even do this because of we're regulated in some areas of our organization? Are we allowed even to do that? So we have to kind of do a lot of checks. I'm sure some of the people who are say, what does Neil do all day, right? Because he comes back to me every other month, But in the background, what we have to do is go through, and do this kind of roadshow about what we're trying to do, make sure it has a good strategic fit, and I think it's an acceptance of that when you're working with corporates, these things aren't going to happen overnight, and there's a process and a journey that you need to go on. But absolutely, there are a lot of fintechs out there who can make big differences for organizations like ours. I mean, I've been working for one in Singapore, very patient, exceptionally patient over the last year. But now they are kind of being brought core into our data analytics strategy. So the patience has paid off and they've manipulated, they've taken some risks, they've built stuff that they didn't know whether they'd get a ROI on that, but luckily they have. But that's the long-term view they've taken, and now they've got over the line, and actually they will see they've got a 3-year journey with us, and I think it's that's kind of the mindset you have to kind of instill in your organization to play it long-term and just be adaptable.
Wonderful. Yeah, I think that was really nicely summed up. So really both sides have to be on the same page for making collaboration a success. Really the self-awareness of incumbents, obviously, that they are a bit slower opening up to fintechs. It takes time to be able to understand what are the real problems that they can jointly solve. So I'm really proud to see that those initial phases are already in the making. So I'm really happy to see that. But also, again, looking forward to the 2030 angle. So as a kind of wrap up for today, I'd like to briefly hear from all of our guests today. What are the key trends that you see coming up that are becoming relevant, not only for yourselves, but really also for the consumers, the society as a whole? If we can start maybe on Pat's end.
I was expecting someone else to start this. So clearly we have to get over how do we get society back on its feet next year, and is it going to happen next year? Is it going to be the year afterwards? There has been a massive change, clearly we're not going to dwell on that. But as a result, I'd like to see that humanity shines through a little bit more now. There's a humbleness, and that manifests itself into how we as a community deliver products and services to people. And so is there going to be more kind of a sustainability focus on your products? Is there going to be more of a fair exchange of value that you're delivering to your customers than there's ever been before? And I'd like to see more of that, the human side of what's required in terms of products and services that are delivered in financial services. And so what happens in the next few years will clearly influence when we get to 2030. So we'd like to see certainly more products and services that start to leverage technologies in a greater way. And with the announcement recently with what PayPal is doing with crypto, with CBDCs coming through, with Libra making its push as well, that it's now firmly mainstream. And that's an interesting piece in the last kind of year or so to see where CBDCs have come through and blockchain technologies. And so if we fast forward to 2030, I think we'll start to see that being firmly used by most organizations. But I also think that we'll start to see the interplay of technologies. So what happens when you start to develop blockchain technologies with AI and machine learning, and with cloud technologies, and all of these kind of coming together to provide unique propositions to take friction out of the way we've done things for hundreds of years or decades, etc. And so I see that happening at a national level, but then within corporates as well. So those efficiencies to be able to hopefully overcome some of the challenges we faced this year when large parts of the world were working from home. And that was a challenge for lots of companies, including governments around the world. So I'd like to see that happen, and I think we will start to see that, future-proofing our economies going forward, but also future-proofing companies to be able to not just deal with internal structures of work from home cultures, remote working, and all of these aspects, but then how do you serve your customers in an efficient way that you can work from home and still meet your customers and try and get that business going. That's my view.
Perfect, thank you. Amit, your thoughts?
I think Pat summed it quite well on many of the things which I was going to say, but I'll just add one. No, thank you. I was just going to add one. I think we'll see collaboration more and more becoming necessary, not just between fintechs and corporates, but between the corporates themselves and enabled by fintechs or enabled by other tech players, right? So a quick example of what went live in our ecosystem last week. In Italy right now, 100 banks are all on a Corda-based platform doing interbank reconciliation, and it's enabled by tech platforms. But this is a collaboration at an industry level, because this brings huge efficiencies for that industry. We see various other cases where that kind of collaboration is needed, either to bring efficiency or do fair exchange of data where you can drive more value, or even to address fraud scenarios. There have been scenarios where fraudulent actors in the ecosystem have taken people institutions for a ride. And if the institutions were going to collaborate or were able to collaborate, I think that enables a lot of efficiency and reduction in cases of fraud. So I think collaboration for us is what I see as a huge trend, along with digitization naturally. But collaboration is not just between corporate and fintechs, but industry-wide as well.
Awesome, thank you. Neil, your thoughts?
Yeah, well, I have the benefit of building on what these gentlemen have said, so thank you for that. But I think, I mean, a digital strategy is clearly at the forefront of what most people are trying to achieve. And obviously that's really companies who have a good digital strategy have been very successful or have had less impact on their businesses during this COVID situation. When you look at things like the digital exchange, which we're doing on obviously part of that is on a distributed ledger technology, but it's about ecosystems and about interoperability across markets. So you talk about CBDC, and there's lots of projects going on in the world. How do they all come together? I think over the next 10 years is going to be very, very interesting. How fintechs can help that communication between that interoperability in the market, I think is going to be fascinating. Digital assets will, it's still unproven. Will it happen, and will liquidity move that way? I think when it does, that's going to be a big change. People talk about democratization of wealth. Things like that that are going to be impacted, and I see this all coming through. Singapore actually is excellent at leading the way in this. I mean, I'm fairly new, 3 years in Singapore, but in that time, I've seen a massive build-up in the way that they are taking that on, with the likes of yourselves at MAS and obviously support. But it's really fascinating how they're bringing that as a hub to bring ASEAN, but also links to Europe and the US all coming together. And I think this interoperability will be one of the major themes in the next 10 years.
Fantastic. Thank you, Neil. And last but not least, Andreas.
The most challenging spot, obviously, but maybe I start building on what Pat mentioned about this year, of course, the very special situation in COVID. I think the one thing which obviously kicked it off is a massive acceleration of the trend of digitalization, also in the sometimes a bit sleepy world of private banking. I mean, out of necessity, right? And that acceleration will obviously carry us through for the next couple of years, and will also help us very much to support one of the key trends, which is the expected massive transfer of wealth to the next generation, to the new generation, which also will be a big trend in Asia. And this new generation is, of course, digital savvy, expects a seamless omni-channel approach, still with the private banker and the human touch, but seamlessly with the digital channel. And will also be, and I think that's also a point which was previously mentioned, which will be much more open and interested and considerate about topics like ESG, so ESG investments and meaningful investments in their portfolio. I mean, big data area was mentioned, will also, of course, support the delivery of personalized investment strategy. And then maybe the last point, I think open banking is definitely a key trend which we observe, and I think on the one hand obviously empowers the customer, also very much driven by the regulators as we know, but will also further strengthen the collaboration in the industry and probably unbundle, and this unbundling, you know, has been around since I started my professional career as a management consultant. We're always throwing this charge and say, yeah, companies need to specialize. But I believe, you know, with open banking, with easier collaboration through APIs and so on, the unbundling becomes a reality, and you can basically specialize, be it as a fintech or also along certain elements of the wealth management value chain.
Fantastic. And that's a wrap. So thank you so much for joining us today. I'm really happy about the different topics that we addressed today. I think the next 10 years have a lot more exciting opportunities in stock for us. We've heard especially the topic of collaboration, not only between incumbents and fintechs, which is largely the conversation being driven in the news lately, but really as a whole for the industry, for cross-industry collaboration. I think that's really, really crucial that we start opening up and start addressing what can be done together as opposed to really fighting off the common enemy, which was startups in the past. We really kind of find a way to go forward all together and co-shape the future all together. Thank you.
65% of all millennials in Singapore mentions that they prefer to use bank transfer in e-commerce. Yet, the number one payment method is credit card, with a staggering 51%. Why do people still want to use an invention out of the 1950s, a physical card, to pay for something online? Exactly. It makes no sense. I am Michael. I'm the founder of Mesh, and we are building Stripe for bank apps and e-wallets. Because the problem is that payments in e-commerce are still broken. Credit cards have very high transaction fees of between 3 and 5%. But then bank transfers are known for their long implementation time. It can take months. And for both, the user experience can be poor. For bank transfers, that involves taking a screenshot, whereas with credit cards, you still need to key in those 16 digits. Our solution is a payments aggregator for bank transfers. And this is Mesh. Our fees can be as low as 1%. It's a hassle-free to implement, and it's a breeze to use for the consumers. How do we get that implementation down to minutes? Well, we're offering for our bespoke code-based merchants APIs and SDKs. And for those who are on the e-commerce platforms WooCommerce and PrestaShop, we've built plugins. For our consumers, we have 3 products. On desktop, there is a scan QR and pay. And on mobile, they can upload the QR, or they get redirected directly into a bank's app. This is our newest product. We're working very hard with all the Singaporean banks, and it's coming soon. But this is how such an integration would, for example, look like with OCBC's Pay Anyone. So a consumer is checking out from a web shop. They select Pay Anyone. They authenticate. The whole payment will be pre-populated. And they make the payment, and that's it. The market is not just Singapore. The whole of ASEAN is up for grabs. There's a transaction fee market of about $4 billion, and we think we can capture 3% of that, about $127 million. The business model is also fairly straightforward. We charge per transaction 0.7% plus 25 cents. And we also offer speedy payouts. The quicker a merchant would like their liquidity, the higher the premium they pay. And if they want it, they could get their payout right now. In terms of traction, we're doing pretty well. Our active merchants have been growing by 57% month over month. And our volume, if you correct it for the circuit breaker in June, has also been growing 100% month over month. Besides this, we got selected into the FinTech Accelerator F10. We have API integrations with both DBS and OCBC. And we landed a pre-seed round of $100,000 in June of this year. This is the team. I'm Michael. I'm a 3-time founder and aerospace engineer. We also have Nanda, our tech lead. He used to be a CTO and co-founder at a content creation startup called Text Mercato. There is Brennan, who's helming products, Aditya, our UI UX engineer, and we have Eduardo, our head of sales. We're also very blessed with this fantastic set of advisors. Of course, we're not alone in terms of competition. I mentioned Stripe earlier, but they're known for their very high fees and their long payout times. We also have a direct competitor called HitPay. They offer a similar pay now solution, but the user experience is mediocre and they don't have any API. So we're looking to raise a seed round of $600,000 in December of this year with a post-money valuation cap of $5 million. We'll be using these funds to expand our team and venture into Malaysia by next year. So would you like to start cutting transaction fees with us? These are our contact details, or visit us at our booth after this, or transfer $50K directly into our PayNow bank account. Thank you.
My name is Bernard Lee. Our team member Emma will tell you about our company, HashSpa.
Large global asset managers use 9-figure technology budgets to scale and automate. Then they cut fees to grab market share. The rest of the buy side is concerned about being Uberized. To confront this challenge, HedgeSpa offers a core investment platform that removes complexity, is a one-stop solution, improves performance, reduces volatility, streamlines processes, shortens implementation, and lowers cost. The platform offers an out-of-the-box solution with end-to-end functionalities, from asset selection to portfolio rebalancing to execution to client reporting. It is powered by big data, AI, multi-scenario, fourth-order math, and quantum computing to ensure the most effective and accurate analytics. And it comes with built-in data connectivity partnered with the Swiss exchange and protected by trusted blockchain R3 Corda for OTC transactions. We use several service models to target different market segments. Bespoke implementation. The platform gives asset managers sophisticated analytics without large upfront costs. This is one example. On our stochastic analysis panel, you can point and click on different COVID-19 recovery scenarios already coded into the system. The platform will recommend ways to improve the portfolio across all scenarios, while other platforms give one good scenario but worse outcomes in the other bad scenarios. Our full application lets specialists set parameters with compliance quality documentation, but most users can simply monitor the results of their portfolios on one page. Insurance companies and pensions gain access to asset liability management and direct estimates of liability profiles from policy pools under extreme tail risk. The platform can nurse a portfolio in trouble back to health in 2 quarters to meet capital adequacy requirements. API servers. For private banks and wealth advisors, we can make onboarding easier through connectors to Avaloq and similar platforms. Our API servers give these users top analytics while preserving their branding. Terminal solution. Family offices and EAMs gain access to a one-stop shopping platform through which they can internally manage assets as well as gain access to our enhanced indices and funds of funds, and consolidate positions from external managers. In fact, we have received paperwork to seed a slate of funds with at least $500 million in AUM. Investment products. As one example, our unique open philosophy allows us to work with any ESG data vendor. Users don't have to choose from a limited list of supported vendors. Charging models vary by product, but generally follow a modest base fee plus success fee model. These are our success cases. Our enhanced Asia index produced up to 10% alpha with no country and sector bias, and no leverage and reduced volatility from the 20s to the teens. Our enhanced Korea index outperformed the Kospi 200 by almost 15 points over the pandemic lockdown period with no leverage. Let me give you a walkthrough of our entry-level terminal solution. The terminal solution gives intuitive touch and feel to a sophisticated core investment analytics platform. It comes with the ability to scan for instruments and look at portfolios from a trusted data provider, as well as providing market news and data, so you can easily monitor the markets and enter trades. Users can optimize portfolios against multiple scenarios simultaneously and select assets based on all possible combinations of factors, timeframes, and methodologies. But you still get to set all the parameters. The system also comes with a transaction engine so that any adjustments and reports can be regenerated at the touch of a button. Our sophisticated portfolio construction algorithms can magnify your alpha by as much as 4 times. Finally, if you are facing clients, we can automatically send reports and provide a white-labeled portal. Once you come up with one model portfolio, we can automatically check how it can be replicated to other client portfolios. Overall, our platform offers a combination of top-tier analytics and technology. Our competitive positioning also makes our platform more affordable than the competition. Our team recently received a large investment term sheet that will support our go-to-market strategy by geography. For instance, in Singapore, we will offer a variable capital company or VCC structure for family offices. Our Asia strategy is based on Avaloq connectors and the terminal solution. We have received in-principle approval to launch in Japan. In Switzerland, we plan to apply for a securities license with passporting in Luxembourg to the UK and will become a part of a Swiss-German API consortium. Our CEO was an MD in the portfolio management group at BlackRock in New York and built their multi-asset functionalities, supported by a world-class team and advisors. The team is recognized by an impressive string of awards.
If you're interested in trying out our solution, becoming a distribution or integration partner, or following the investment round, let me invite you to get in touch with us with the contact information. Thank you.
Hello everyone, we are PyChain. PyChain is an ISO certified RegTech helping banks, financial institutions, and fintechs attain sustainable compliance. We started our operation in 2019, and right from the 5th month of operation, we started generating revenues. Anti-money laundering is one of the most complex and challenging areas of regulations. Regulatory bodies across the globe bring frequent new regulation in order to curb money laundering, thus making it the most complex area. Now, for the banks, whenever they have to deploy or introduce a new money laundering regulation, they typically bring in a new rule-based engine and attach it to their existing engine. Today, 93% of all the anti-money laundering systems that are running in the banks and financial institutions are via these rule-based engines. This has severe consequences. 97% plus of all the newer frauds are unfortunately never getting detected. 95% of all the alerts generated by the systems are false positives. This has severe consequences. USD 350 billion plus is wasted every year by banks, financial institutions, and fintechs. A, because of the penalties which arises from non-compliance and non-detection of newer frauds. B, the alerts generated are false positives, which means that larger manpower is needed to harness and triage these false positives, thus leading to a lot of productivity losses. This is where we brought in world's first cognitive compliance platform called DeepPy, powered by AI and blockchain. This platform is also built with quantum computing in mind. Well, this platform is not only having the benefits of AI and distributed ledger technologies, but it also has been built with proprietary data acquired by PyChain. We've also built this platform very closely and in partnership with banks and financial institutions, thus making it very aligned for the industry. The benefits that system provides are in three prongs. Number one, it reduces the turnaround time by 90%. It reduces the operational expenditure by 75%. And the most important, it increases the true suspicion detection by 3x. It's a huge global opportunity. It's a 16 billion AML screening and monitoring market and a 7 billion transaction monitoring market. We have already generated a revenue of SGD 200K during the last year. We have also raised an investment of SGD 500K. A very capable team is working towards this mission. My name is Shubh. I am the co-founder and CEO of PyChain, and I have got a decade plus years of experience building and selling regulatory softwares. With me, I've got Prasanna, who is a co-founder and chief product officer. He has got a decade plus years of experience, again, in financial software and regulatory software building. We have also got a team of AI experts, blockchain experts, and deep domain experts who is bolstering this mission. We have got a team of veteran industry experts in the area of banking and regulation. We are already working with some of the very large banking and financial institutions in Europe and India. We have some amazing partners like F10, Numa, TurboStart, NSDL, and some of the very premier institutions like Department of Science and Technology, FCO UK, NSRCell of IIM Bangalore, and Indian Institute of Science in India. Well, it's a big opportunity, a very strong team driving this mission. We have already generated traction and interest in the market. We are already invested. Today, we are looking forward to raise SGD 3.5 million. I'm looking forward for your support. Thank you so much.
Hi, I'm Ben, CEO of Staple. Staple is a Singapore-based AI company that develops cognitive technology to read, interpret, and extract structured data from documents at scale. And it can do this regardless of layout or language. The problem we're facing is a common problem across a number of industries, but it's particularly prevalent in banking and financial services. Banks and financial services companies have to deal with the lattice work of documentation, as well as information that flows into and between a number of systems. We think relying on highly skilled, experienced, talented employees to handle this sort of work is such a waste of valuable resources. You'd rather strategically deploy them on value-adding, revenue-generating, customer service activities that actually matter to your enterprise. This is the team that set out in 2018 to solve this problem. I have background in professional services and financial services. Dr. Josh Kettlewell and Dr. Ashma Arora are both PhD computer scientists with expertise in machine learning, computer vision, cryptography, and physics. And recently, Hannah Tran has joined us from Gartner as a ex-strategic account director in the Southeast Asian region. I should be clear that we are not just an OCR solution. OCR is old technology. It reads long-form documents like books from top to bottom, start to finish. It simply converts an image to text. It doesn't understand what data is important and what data is not. So if you contrast that with how a human reads a business document, you'll understand that we don't read all these documents like books. We focus on the information that matters and leave behind the information that is irrelevant. And it's precisely this human approach that we've taken in developing our solution, which combines OCR with machine learning, NLP, and computer vision to deliver superior results. And this is a sample of how it actually looks. See, we haven't added these highlights ourselves. This is actually how our system illustrates to us and to our users what it considers to be important in any given document type. Now, these documents are invoices and purchase orders, but you'll note that they come in a range of file types: photographs, PNGs, images, TIFFs, PDFs. We can handle all those document types. And better yet, we can do a number of layouts. We are not just restricted to invoices and receipts. We can do any kind of document where layout is important. Identification documentation, proof of income, credit applications, proof of address, financial statements, company registrations, all these documents where layout is important. We simply tell our system what sort of document it is ingesting, and it can look for the relevant data points in that document, regardless of variations in layout. Traditional OCR simply breaks when faced with such ingestion challenges. And like I said, we can do it regardless of language also. We're currently supporting users in Vietnam, Thailand, Japan, and Indonesia. We can support close to 100 languages, and we also support handwriting. We wrap all this powerful technology in a user interface that employees really enjoy using. We're not just typical enterprise software that is designed around an unattractive interface. We've made a very conscious effort to make sure that the experience of reviewing data and reviewing exceptions is an enjoyable one. And a user interface is necessary because we can't always guarantee that the documents ingested by our system are actually correct themselves. So it's necessary to provide this user interface to alert a human user when there is a problem. A human users can review the document in line with the structured data extracted on the left and the original document on the right. And these fields will change depending on the document type ingested. We can even do things as complicated as technical drawings, construction blueprints, or piping and instrumentation diagrams. For the financial sector, this may not be relevant, but it demonstrates to you the depth of our technology and the breadth of our use cases. We're working with a number of companies in Southeast Asia, particularly in the financial services and professional services space. And we're looking for more. Any companies who have particular pronounced issues and challenges with document-heavy data processing workflows, we'd love to help. We can assist with credit applications, customer onboarding, KYC, compliance, or any other document-heavy workflows that your organization may be facing. We'd love to hear from you. Thank you.
As I mentioned earlier, you can win something for today, and I'm going to explain you how. So I mentioned earlier that we received over 300 applications for the first batch here in Singapore, and we are currently scouting for the next one that is starting in March next year. So we would like to ask for your help. And we already created a post on LinkedIn, and I'm going to post the link here in the chat. So if you want to win the up to $300 voucher, we have actually 3 vouchers. So one is 100 Singapore dollars, the second one 200 Singapore dollars, and the third one is 300 Singapore dollars. And we're going to draw the 3 lucky winners from those who are actually resharing our post on LinkedIn. So please go ahead over to LinkedIn and share the post that we have put there. Ideally also like it and react to it, but most importantly, really share it on your LinkedIn so we can see that you are actively engaging with the post, because that really helps us to find the best teams for the next cohort as well. All right, that would be it for the winning part, and I don't want to keep you too much longer because I know you're quite eager to engage with the startups and with the other participants for today. So a quick outlook of what is coming up next. As I already mentioned, we have the incubation program starting next year in March. Currently, we are scouting for it until the mid of November. At the moment, we have closed the applications for the acceleration program, which is again also launching this year in December for the first time. So here in Singapore, we are accepting scale-up programs that are collaborating or looking to collaborate with our corporate partners. Next up is also always interesting for us to get recommendations for new mentors. So if you are a mentor, if you know a mentor, if you're currently working with startups, let us know who's your favorite one, and or reach out directly to us. We are always happy to onboard new mentors for our startups. All right, and actually 2 more exciting events that could be of interest to you. We are currently preparing our anniversary here in Singapore. We actually set up the business here last year in November, so it's going to be our 1-year anniversary for the F10 itself. It's going to be on the 19th of November. So mark it in your calendars. Invites are going out next week, so stay tuned. We're actually going to continue our discussion on the financial services landscape of 2030. And even more exciting for us is really that we are going to be part of Singapore FinTech Festival this year. Again, we have been part of the festival for the past 2 years as well, usually always as a participant. This year, due to its situation that it's going to be a hybrid event, we have a bit more of an active role. So we have our slot fixed, so keep your eye out for our session that SFF is going to broadcast on day 4. So F10 is actually going to be part of the Investor Summit. And with that, I won't keep you any longer, so please enjoy engaging with everybody here who made it here to hop in. You can move over to the expo now, where you can find the startup booths. You can also find the help desk at the sessions if you have trouble finding individuals and you would like to reach out to them. So we are also available for questions there. You can still ask your questions here in the chat, or obviously go to the top right and start typing in direct messages. So you can also start private messaging and I think private video calling. So please go ahead and mingle as you would do in a regular in-person event as well. And with that, thank you so much for dialing in today and being part of this. And I'm really excited to also meet you in person at some point in the future. Thank you so much and goodbye.